Well, good morning, ladies and gentlemen. Rob here. Hope you're having a fantastic day. Bright and early, dark, 7 a.m. here. Well, maybe not so dark, but feeling dark with as early as it is in the morning. Hope you're all having a good day. Let's go ahead and make sure you can hear me. If you would, give me a number 1 and let me know that you are there and I am coming through. I'd appreciate it. I can see my picture on YouTube, but just want to make sure you guys are hearing me okay. Fantastic. All right. I know it is early. Thank you for that very much. So, guys, today I want to talk a little about, first off, we're going to spend a little bit of time going over the markets, see what's going on. I did a training yesterday where we talked about should we be buying pullbacks. So I'll go a little bit into that as well today. And I want to go into a strategy, an option strategy called credit spreads, and kind of go through some of the details of that trade setup. When you look at trading stocks, let's say you're trying to pick a price range and you want to trade options on the stocks, of course, since we're options explained. But let's say that you want to trade an option on stocks that are between 50 and 80, maybe 100, because that's a price range that fits into what you do. That's awesome. That's great. Where's the problem? Where's the issue? The issue lies in there that you're not going to be able to trade the Apples of the world, maybe, or, well, Apple, yeah, after the split, but the Amazons, the Pricelines, the Chipotles, some of these larger stocks, the Modernas, and some of the stocks that have just taken off become a little bit too complicated. Or you may find that options pricing is just a little bit high on the stocks that you are interested in. Maybe the volatility is through the roof. When Robin Hood came out with their options chain that very first day, I actually caught a video. I did a video of it, of the options going live for the very first time. And we looked at the implied volatilities and where they moved. And you can find that on our YouTube channel. But it was so bad, TradeStation crashed in the middle of that option chain, right? As I was using it, it actually froze up. I had to restart TradeStation again. But, excuse me, a little tickle this morning. But when you look at that volatility, you may say, I can't afford it. It's too much. To buy an option on Amazon that's a week out, if you're doing it on a Monday, it will cost you over $100 a contract to buy the right one anyway. So in order to alleviate some of that pain and frustration, we can utilize strategies like credit spreads to help offset some of that price issuance that you've got to contend with in there, right? So we're going to go into that as a strategy today. We'll look at a couple of other candidates. We'll pull some of your candidates in as well and talk a little bit about those and the things that you want me to take a look at. We'll have a little bit of time at the end, I think, to do that. But first off, let's go through, and I basically start my morning off by going in and looking at futures. And I analyze futures every day when I first wake up, when I first get to my trading system, I should say, which is when I'm waking up. When I first come to the trading system, I really want to see what's going on in the overnight session and how do things play out. So I've got a tab set up with 8 different positions on there. The top 4, starting from left to right, the top 4 are the S&P 500, which is the ES, the YM, which is the Dow, the NQ, which is the NASDAQ, and then the RTY, which is the Russell 2000. Bottom left, I have Bitcoin, and then I've got gold, crude, and nat gas. So that's my 8 contracts that I like to look at. ES is where I will spend most of my time, although it isn't my favorite contract to trade. The YM is, and I'll tell you a little bit about that later. But I like to go here because it is the market, right? The S&P 500, the ES, is the market. There is no more important market than ES. And I'm going to go ahead and grab a drawing tool. So we just got to open a program up that lets me get one. And it's going to show that it's going to record, which we're not, because the YouTube is recording this just fine. But while we're waiting, look what happened here. There it is. We got it. All right. Let's start that. This vertical line right here is where the markets closed and opened. Well, what do I mean? We closed at 5 p.m. last night Eastern. We opened back up at 6 p.m. Eastern. So if I put my mouse on any one of these candles or all the way over, you'll see here we've got 1700, right? That means that candle ended at 1700, which is 5 p.m. Then we've got this little candle down here. You see it shows, actually it's this big red candle. Right here it shows 1805. That's 6:05 p.m. That's when the candle ended, right? So if we look at from a market standpoint, we went up a little bit and then we just went flat. I mean, we were dead until we got to this 2 o'clock-ish time period, which is where the news in the pre-market starts for the European markets. And we had a tremendous surge in the ES. Now, granted, by the time we got till 5 a.m., we had given almost all of it back, right? We went a little bit further even, down to about where we were on the close, and we've moved up just a little bit. We're up about 8.5 points right now on ES. So we've had a bullish move, and after yesterday's overall move on the S&P where we crushed it, right? And we were up 38 points yesterday on the S&P. I mean, we hit an all-time high. Did we hit closing high? Let me see. High price here was 44.8988. And here we've got 44.80. No, I don't want high. Sorry, I want close. 44.79 and a half. 44.79. No, so on this day we were up a few pennies higher. So 44.79.71 and 44.79.53. We got right there. We pushed right up against resistance, right up against that high. And notice I've got a line drawn up there, and I'm going to back it out. It's going to get a little busy on the screen. Let me bring in as much as I can. There we go. So this fib line, this -382 line, is a major Fibonacci level that we look at. It's an extension on the fibs, right? We tend to hesitate at these levels, right? Which is exactly what's happened. We pushed up and we failed. Now, it's ironic that we stopped right at a fib level. Our actual high on that day was 44.8026 versus 44.8117. So just shy of $1 away from that. On a $4,400 index position, we hit it as far as I'm concerned. We nailed it at that point. So we pushed up in there again. We closed there. We've gapped up above it right now. We're up about 8 points. Where are we in pre-market? So we're at 44.84 right now. So still about 8.5 points to the upside. So overall bullish connotation for the day today for the broader market, which is the S&P 500. Unlike the Dow, the YM, which is my favorite of the futures to trade, by the way. And that's just because there's less manipulation in the contract than there is in ES and NQ. But similar pattern. We had that run up and then that big fail that brought us back down. We're up 52 points on the day. Pre-market, right? NQ had a slightly different pattern to it. Right? We opened flat. We made the move up. We went sideways. We dropped off, but nowhere near what we had seen in a pullback on the ES or the YM. So overall markets are all bullish today. We're up 46 points to the upside. RTY is on there because I trade RTY as a vehicle, as a future. But I also like to look at it because of what I do with the Russell 2000 with my iron condors that we trade. We're going to look at one today. So similar pattern, moved up. We came back and had a nice climb. We're not quite back to the highs of the morning, but in the overnight session, but we are in a nice position. Bitcoin backed off a little bit off its 50,000. It's at 49K right now. Right, and we've got gold. I'm going to make gold full screen. Gold is flight to safety, right? Even though we had a bullish day yesterday, we had a nice run into gold yesterday, but we've gone sideways ever since on gold. So nothing really helping us there. When we look at crude, that's a big concern for people both through the summer, through this year with having to pay for gasoline, which we're seeing gas prices creep up just a little bit more here on Long Island in New York. And then as we're coming into the winter months here in New York, heating oil is a tremendous vehicle. There's not, you'd be surprised how many homes, including our own, we don't have gas. There was no gas in our area when we bought the home. When we did the construction, gas was so far away, it would have been $20,000 for us to put gas in the house. So that never happened. They're getting it in the area now, but you're seeing less nat gas here than you would think. we're seeing more crude oil, or a lot of crude oil out here on the island. So, and it's gotten better in the last 10 years. It was horrible. We basically knocked our house down in 06 and rebuilt it. There's one 2x4 in the wall that was existing. That's it. Everything else is brand spanking new. We took it all down to nothing. And so we got a nice little move to the upside on crude. We're sitting right now at, call it $67 a barrel. And then nat gas, again, nat gas is a good trading vehicle. We traded on Thursdays when the gas info comes out as far as the reports on what's going on with gas, right? Other than that, no. So we're up near some highs also of the day on nat gas. So overall markets, we're doing okay, right? When we look at, let's bring up our list for today. Here's my list of the positions that I tend to look at, or I'm going to be looking at through the market today. I've got them broken out. You can see them in the bottom right-hand corner. They don't all fit on the screen, right? Morning prep, I'm usually doing that about 7:30, 8 o'clock, looking for things that are coming out from the overnight session. I do a video usually every day on pre-market prep where I go through those 8 indexes, just as I shared with you. But I wait till after 8:30 to do them because I want to see if any economic news affected what's happening there. And then I also look at candidates that are making their moves, because a lot of the pre-market stuff is not coming out until 7, 8 o'clock. So that's what that morning prep is right in there. And then everything else is broken out by trade type in here, including, if we start off at the very top, we've got the S&P 500. I always want to go back and analyze what it's done, what the S&P does, which is what we're looking at right here. And if I bring us over to a template with moving averages, there we go. Very similar. I mean, you saw the picture, but I like to see where the moving averages lay out as well to look for confluences of the various levels that we're focused on in there, right? Fibs is the basis for everything that I do in my trading. I'm a big believer in that as a strategy, as an indicator set. And if you've ever watched any of the trainings that I've done on it, you'll understand why. We're actually doing a live full one-day training in New York coming up in September. And in that training, we're actually going to go over a lot of things on fibs, including one of the most recent strategies I've introduced, which is zero line breakout. That's absolutely crushing it. And we've got a couple of candidates on here to look at today. So I've got AMC, I've got GameStop, and I've got Robinhood on here because of the Reddit trades, right? Whether you want to call Hood a Reddit trade or not, it will be. Once all of those shares are available for shorting, I think you'll see a lot of activity in the Hood markets. And I think you'll see Reddit start to get a lot more active in it. But I'm not a fan of any of these just yet. We'll take a look at some of these if we get a chance in a little while. We'll take a look at these charts and look at what kind of spreads I'm looking to trade on them, or positions I'm looking to trade, when, why, and how. And it's all going to be based on the pattern the chart is showing or sharing with us. But what I want to look at for now is what's called a credit spread. And if we go ahead and look, I've got 3 symbols under credit spread. The very first one is Snapchat, SNAP. Right? And I use 2 different charting programs. I use TradeStation. That is my mainstay for my trading. Right? But I use this program, which is proprietary to us, called Omega Charts. And Omega Charts is our system, but it is a charting system that the creators, the guys who put this together, the charting engine they've been able to build is crisp, it's clean, it's easy. You know, TradeStation has a program called Easy Language. They lie. It's not easy. You need to be a programmer to create filters and things. You don't need to be a programmer to create filters on this. It's really simple, concise. You know, open equals close is the filter for finding a stock that is a doji for today. The open equals to close. If you want to find it for yesterday, open 0.1 equals close 0.1. It's an easy filter to use. I like the charting system, the engine, how crisp it is. Certainly, I use it all the time when we transmit data to all of our own YouTube and Zoom stuff and things we do online, and even live. I use the white background on it, which I like a lot. I use a white background on YouTube for some of the trainings I do, and it's not as clear a white. It's more grainy on there. So anyway, but you're going to see me flip back and forth between 2 programs, right? Snapchat, we had this great channeling pattern setting up on Snap, SNAP. Let me go back over to a template with no moving averages. Okay, let me get rid of my mouse. And let's go grab a pencil. All right, so I had this nice move inside of here, basically this channel, right? And then we stopped, making it back down to this lower level. I have a series of lines drawn in here. I draw channels differently than most others will. And at one of the trainings, we'll actually go over channels. One of the weeks we do this, we'll go over channeling positions. The strategy I use does give brand new traders a very big advantage over other traders that are not familiar with how I draw channels. And I know some of you saying, but Rob, all a channel is a stock that's just moving sideways, right? So we just draw around those highs and lows, right? So you got a stock that's doing this, right? We just draw off of those highs, we draw off of those lows, and we call it a day. Yes, and that's what this blue line and this blue line are, right? But you will notice that I have a few more lines than just those two blue lines, right? And those lines were all drawn in automatically when I drew the two blue lines, right? And again, part of the benefit of what I do here, even I've been using TradeStation over 20 years, but part of the benefit of what I do here on Omega Charts versus TradeStation is I can easily program different tools, right? You know, here I've got a regular Fibonacci tool, and then I program this one for what I call a Fibit tool, right? And then I've got my targets tool, and then I have my channeling tool. Let's do that one in a different place. It's a little high. I have my channeling tool. So you can see I have multiple lines that are drawn out there. So I'm able to program each of these tools for the different settings using my settings. So I don't have to tweak it every time I use it. Well, these two lines that are at the very top, this black line and this green line, some will look at that when this channel was taking place and saying, Rob, there's no value in that. You know, if we go and cut it off before here and say, you know, what in the world do these lines mean? Just get rid of them. They're garbage. They're not. When we gapped up, albeit on earnings, we gapped up above that fib line. We ran up to that resistance and we pulled back to that line. We pulled back to it again. We ran to it again. We pulled back to it again. And now we took our bounce off of there yet again. Right? Am I saying I knew it was going to go right to that line? No. But I know when we break out of channels, which happens somewhere between 3 to 5 channels, once we see that take place, that 3 to 5 channels, we tend to get a breakout. Right? Up or down. Now, do we get some that go longer? Absolutely. Do they all go longer? Absolutely not. Some will be less than the 3 to 5. They'll start out and then they'll kind of peter away, right? But once I saw that we were getting this move up, it showed some bullishness in there. This gap up on their earnings, right? That gap on their earnings was phenomenal. And then we've played around a little bit in there. And right now we're sitting at 75.5. We've got resistance at 79, right? So I could go ahead and buy an option on Snapchat. Let's see if we go look at Snap. I can go buy an option on Snapchat. So if I want to buy an option, I could day trade Snapchat. And if I'm looking to day trade it right now, I'm going to spend a very small dollar amount on Snapchat. Let's see. We've got enough open interest. It's greater than 100. My delta is 66. 65 is my minimum. So if I'm a buyer, I'm looking at buying that 74.5. Even in the pre-market, it's only $1.99 by 210. So very small bid-ask spread. Piece of cake, right? If I decide I want to swing trade this, I need at least 30, possibly 60 days of time, depending on how long I believe it's going to take the move to take place. I'm at a 72 strike, which is going to cost me $6. I have a 68 delta and a 172 is my open interest, right? So not bad, not bad. Costs are okay, right? But we're going to compare this to looking at an Amazon in a moment or a company like that. Maybe we'll pick something that's a little bit higher, like a Moderna, but not off the charts, or Netflix, but not off the charts like a Amazon as far as cost goes. Well, basically what we're looking to do here is this. When you look at credit spreads, there are two different types of credit spreads. There's what is called a bull put spread and a bear call spread. Take the word, break it apart. Bull put spread. 3 words. The phrase will break apart. Bullish trade, using puts, spreading out your risk with options. Bullish trade using puts, spreading out your risk with options. Okay, great. Bear call spread. Bearish trade using calls, spreading out your risk with options. It's just the type of trade is based or predicated on what the pattern tells us. Right now, if you had to pick for yourself what your bias is, are you bullish, bearish, or what are you on this trade? You could be, I don't know-ish. At that point, credit spreads work wonderful, right? But when you look at this, I said, I am bullish. So I want to look at a bull put spread. Now, bull put spread is the combination, I'm trying to say culmination, but combination of two different options that we're going to do on the trade. We ideally want to do them as a married position, meaning we do them together, so we're not getting manipulated or messed around with by the market maker. But that trade setup requires you to do what's called selling a naked put. So if I want to sell a put, that means I am bullish. I'm selling an option that I don't own. What happens? If I look at this, if I look at the Snapchat chart, in an ideal world, I want to be somewhere down below this $72 range is where I want to be, somewhere down below that point, right? That is a very faint color. Let's see. All right, that's fine. So I want to be somewhere down below that color. Let's just grab this tool here. Somewhere down below that 72 line, right? Well, that's great. Let's say that I sold the $72 put. And let's say they paid me $1. I don't know what it is. Doesn't make a difference, but that's my credit that I take in. The question you've got to ask yourself is, how far up can the stock go? Stock can go unlimited. If the stock goes up to 75, 90, 500, how much would I make? You'd make $1. You're taking that $1 in. That's your only potential as far as what you'd make on this trade. How much am I risking? Well, I don't know. Here's the question. How far down can the stock go? 0, right. Do I plan on it going to 0? No. Could it open up tomorrow down 20 bucks? Could there be a problem? Fraud. They lied on their books. A CEO is being terminated for something or whatever, right? Lawsuit coming their way. And I'm not saying any of this is happening, but if this happens, you could see your position open up and adversely affect the P&L of your trade and or your trading account. Well, how much risk would you take on with that? Well, a lot. Considerably, you would take a lot. What we do with the credit spread is we're going to sell the option up here. Let's say we sold the 72 and we're going to buy the $71 put. And again, I'm making these numbers up right now as far as price. We'll look at actuals in a moment. But let's say they paid me, I had to pay 50 cents. We'll get a bracket around that. I had to pay 50 cents on this trade. So they paid me $1 to let somebody put the stock or make me buy the stock at 72. Okay. And then I paid 50 cents to make somebody else buy it at 71. So I'm taking in a net credit, and that's what it's called, a net credit of 50 cents on this trade. All right. Now, what's my maximum risk? The difference between the two strike prices, between the 72 and the 71, that's my max risk. Not max, max risk. There's someone named Max in here. He's very angry right now because I wrote max. Max risk in the trade is the difference between the two strike prices. Now, I'm not saying that uncovered puts, naked puts are a bad thing. I trade them all the time. But this is a way to lower your cost basis and reduce your risk in the trade, that if it were to go against you adversely, you're okay. All right. I trade naked puts around very specific strategies like news that have driven them up. Not necessarily today on this for Snapchat, but certainly when their earnings came out, that to me is a great potential, depending on what the options were valued at and so forth, for naked puts at that point, but I wouldn't be trading down here. I'd be somewhere down in here. But that's a great opportunity to consider a naked put. But the credit spread gives you risk aversion that you don't have with that naked put. See, could I buy an option on this? You could buy a call option, but here's the problem. We went up, options pricing went up, we came down, option price dropped, and what happened? Theta, time value, deteriorated, implied volatility dropped because of the strength of the position pulling back. So all of a sudden, my $4 option that was here is now worth $3.25 over here. And even when it makes it back up, because time value has deteriorated, maybe at this point it's $2.75, right? And then by the time it gets here, it's at $2, right? So we're playing games. We're losing value in that option as a buyer. We need a directional move in an ideal world, right? That continuation for buying that call option, call in this scenario. We need that directional move for it to be valuable to me to want to take that setup, right? And I've got to have a reason for thinking it's going to happen, that's going to move, right? Moderna being added to the S&P 500, that was a reason. Every mutual fund that has the S&P 500 shares in there, if they have SPY, it doesn't matter. Every mutual fund is buying that position. They have to buy Moderna if they're running an S&P 500 type fund. They've got to add the Moderna to their list. Okay, so when we look at Snapchat, let's go in and take a look at the option chain itself. Right, so I want something in an ideal world that's underneath that $72 strike price. That's important to me. Oh, Alan, we may get the gap fill. The question is, are we getting it now? Is there enough momentum to drive it down now? We may get it, absolutely. Newbies, good question. Is that a 3 to 5 time frame for Snap or for all stocks? I wasn't referring to Snap on that one, Newbies. It's all stocks. Just generally, we tend to channel 3 to 5 times, right? You need at least 2 to identify the channel. And then by the third one, that may be your last one. You may only get 1 shot at taking the trade on a channel as you see it before you get a breakout, whether up or breakdown, either way. All right, so we want something under that $72 level. So let's go look, and we'll look at this week, right? So I've got a $72 put that if I sold this put right now, it's trading at 36 by 39, okay? 36 by 39, and if I go with the midpoint, I can get 38 cents. I don't know, TradeStation just seems to automatically round up. I always look at those numbers. I'm not going to try to negotiate and get 2 pennies of a 3 penny spread. That's 2/3. I'll go for half. So in this case, I would just say, give me 37 cents. I wouldn't go with the 38, but that's me personally. But what are we doing here? We're taking on a risk that somebody can make us buy the stock at 72. But you're saying, but Rob, it's trading at 75.85. I'll take it at 72. Yes. But what if Alan's right and we start to pull back and we fill that gap? Then what? Well, now we're in trouble, right? Now it's at 72, it's at 71, it's at 70, right? And it's at $70. Somebody can make you buy it at 72. Well, if you have to buy it at 72, you could turn around and sell it at 70, and they paid you 35 or 38 cents, but we've got the trade going against us, and it could go lower. It could go down to 52, right? That gap could just fill and drop right through the bottom, right through the floor. So if we looked at this, it's okay. We're going to put our mouse over on TradeStation. Your broker may be different, right? I'm going to left click on this and we're going to put it into sell, right? It automatically comes up as 5 contracts. We're not going to change that right now. I'll change it to 1 in a moment just so you can see what we're looking to do, okay? So now if I am looking at this saying, okay, I am willing to take on that risk of selling that put, then you're golden. You're good to go. Right. But if you look at this and say, you know what, I would rather have some protection underneath there, then we would look at buying an option that's lower than that. Now, Snapchat has 50-cent increments, great and fine and good, a little too tight normally for decent credit spreads. It's wonderful when you're looking at buying a call, buying the put, and you've got all these choices to pick from, right? As long as you have enough open interest, I don't care, right? You've got tons of open interest on calls. This one right here that we looked at has an open interest of 1,000, and we're good, right? You don't know if they're sell to open. You don't know if they're buy to open. You just know they're open. So what we're going to do is I'm going to skip a strike when you're going to come up here to the 71, and we're going to click buy on the 71. And I'm holding the control key down on TradeStation, and it combines those 2 orders together. So if I drop this down just to put 1 contract in, just to make it real simple to understand, right? At the limit price for the MIG, you'll see it says 12-cent credit for limit right in here, right? At the mid, that is taking the mid price of both positions right here. The 71 doesn't have a mid price. It's 25 by 26. Our mid price is 26, right? So that's taking it at 12 cents. If I went with the natural, just click on it. It puts natural in at 10 cents. It gives me 10 cents of credit in here. Now, some of you may look at it and say, Rob, I could do this whole trade to make 10 bucks. Hold on a second. I don't want you looking at what your cash in on this trade is. Don't look at the cash. I want you to look at the rate of return. So let's see, where's my calculator on this system? Right here basically is what's going to happen. Actually, let's do this. Let me get a notepad. Let's do this first. All right. Let's put it here. So we're going to put BPS for bull put spread. Right. And we're going to do it on Snapchat. Right. We're going to sell to open STO, the $72 put. We're not going to put a price to it. And here's why. We're doing this as a married position. We're going to buy to open the $71 put. Right? That says, let me make this a little bigger. Let's put that out of the way for now. I just want to keep the puts where you can see the numbers over here as we're working. So that means that we have a max risk of 10 cents. I'm sorry. Nope, my bad. Max risk of $1. I'm thinking ahead already of what we're looking at for the position, right? This right here gives us a credit and I'm just going to make it 10 cents. We go with the natural. We don't even try to negotiate. 10 cents is what we get, right? When you look at this, here's what you need to do to calculate your rate of return. The formula is cash in over cash out. What's my cash in? 10 cents. What's my cash out? 90 cents. No, it's $1, Rob. Okay. My maximum risk in this trade is $1. If they pay me 10 cents, I need to have the other 90 cents to do this trade. So I need to have $90 in order to make 10. So what does that do for me as far as rate of return? If we do cash in over cash out, cash in my pocket is 0.1 divided by 0.9. It gives me an 11% rate of return on this trade. Right? Don't look at the dollar amount. Look at, you only need $90 to do this trade. Right? But Rob, if I bought a call, I could make a lot more money. You could. This is not about that. See, if you buy a call, what has to happen? The stock has to go up. Right? So if I'm a call buyer, if the stock goes up, I make money. If the stock goes sideways, I lose money. If the stock goes down, I lose money. Okay? That's just the way it works. You have less of a chance of being right, but your profit potential is greater. It's all a matter of the risk that you're willing to take on. There's not a right or wrong. You could say, I'm trading calls on this, and you would be fine. Credit spreads makes me right more often than buying an option would, right? And this is on a call. Let's say I bought a call, right? If I sold a naked put or did a credit spread, we're talking about here, credit spread, if the stock went up, this is a bull put spread, right? So BPS, we'd make money. If the stock went sideways, we'd make money. We got paid already, so we're making money. If the stock went down a little bit, we'd make money. stay above 72 and I make money. If the stock went down a lot, that is where it cost us money right there. I have a better chance of being right in this trade with a credit spread, which increases my odds of winning. But that better chance of winning reduces my profit potential in a trade, always. If you take on a trade that, you're only going to make 5 cents or 1 penny, right? But your chances of being right in this trade are astronomical. Well, then for me, I'll take the penny. I'll just do it a lot, right? For me, look at it this way. If we use a baseball analogy, it's getting on base instead of hitting a home run. I want to be that 340 batter, not the 280 batter, right? It's an extra zero in my paycheck and the Hall of Fame, right? I'm not trying to hit home runs, although I'll get home runs with some of the trades we do. This is not a home run trade. All right, let me see some of the questions you guys have in here. All right, Jim, I'll look at Delta in a second. Thanks, third wave. Jim said, why would you want to do a bull put spread? Hopefully that answered it, Jim, as far as, okay, so, all right, hopefully that answered it as to why we did this versus buying a call, but you had a couple of comments in there, so let's see. We did a bull put spread on this because we want to take in the credit. If we did a bull put or a bull call, I think you put in bull call. If we did a bull call, that would be a debit spread. I'm again spending money. This makes somebody pay me. I don't know about you. I'd rather have somebody pay me. Those of you that are sitting with small accounts, maybe you own a position in there. You own some Ford stock, or you own a couple of shares of Facebook in your portfolio, and you've got $500 left to your name to trade with. And you say, I really can't do a whole lot. Well, if you buy a call option, you got $500 left, right? If I am doing a credit spread, I can use that Microsoft stock or that Facebook stock or that Ford stock as collateral on this trade. I don't even have to have the cash. So guess what? I am double dipping. If you already have all of your portfolio is used up and you have no cash left and you're just sitting on a stock portfolio, I could use that stock as collateral and basically how much cash do I have as an outlay of cash that I need to do this trade? Zero, because it's using up the cash that's already used. So I'm double dipping and potentially making money on it twice. So, excuse me, maybe we'll talk about debits another day. I don't do a lot of debits. I like credits better personally. All right. So as far as, let's see, do we let it expire? That's the goal, is to let it expire and just go worthless, right? There are ways you could buy it back. If it gets to a penny or 2 pennies, you buy it back and get out of that. All right. So hopefully that answers it for you, Jim. Let me know if not. All right, good. Excellent. Excellent. All right, that's the setup, guys, on bull put spread. Now, I'm looking at Snapchat as one, but what if we went to Amazon? Let's not do Amazon. Netflix. Oh, wait, let me share this with you first. A question came in on Delta. How do we look at Delta? So Delta is rate of change. It tells us how much the option is going to change for every $1 move in the stock price. Right? So rate of change. Well, and we're still on Snap on this option chain here. So it shows me that, these options will move 16 cents or 12 cents for a $1 move in my direction or against me. It doesn't make a difference. It's going to move that amount. It also is a probability calculator. And what I mean by that is it tells me that on that $72 strike, the one I sold, there's a 16% chance I'm going to be wrong on that trade. That's it. 16% chance that this option will expire with intrinsic value. I like that a lot. If I can get under 20, I am ecstatic. If I can get a delta under 20 on an option I'm looking to sell. All right. So we look Snapchat, very inexpensive to buy the calls. If we bought the call option for a day trade, we're looking at this about $2, $2.10, whatever that number would be, but relatively cheap. Right, we're going to look for the 543s on Netflix. So we just make a bigger picture there. I want to be somewhere down below this fib line. Right, so let's say 543. Just write the number down so I don't forget. Let's go over to Netflix. Let me X out of this trade. This is what I'm looking at for today on Snapchat. We'll see what the numbers look like when they open. So if we go to Netflix and say, all right, let's forget the credit spread for now. Let's go buy an option. You know, I'm buying this 545 call, which is going to cost me, we'll call it $11. 1093 is the mid price. We'll call it $11 for ease of math. All right. Well, if I'm looking at having to spend that kind of cash, right? For some, that's not a big deal. It's $1,100, piece of cake, one contract, you're good to go. Others are going to go, you know, I'd rather not put all that into it. Maybe I've got a smaller account, but I love the thought of trading Netflix. Well, I want to be somewhere down below that 543, so I'm looking at that 540. If I sold a put on the 540, I would be selling the 540 put for $1.54, right? But now I take on a risk. The stock's trading at 563.5. If it drops down below 540, someone will make me buy it. The likelihood, it's 18% chance. It has a delta of 18. So I could, but not necessarily what's going to transpire there, but it's possible, right? So you've got to take that into consideration. You know, you've got a low risk, you still have a risk in that trade, all right? If I said, all right, if I go ahead and I sell that 540 put and I buy the next strike price below it, which is the 537.5, right? We have $2.50 increment. So $250 is your maximum risk in this trade. You now limited your risk on Netflix to $250, period. Maximum. You can't lose more than that, right? You're going to take in a 32-cent credit on this position. So how does that work? Cash in is 0.32 divided by cash out, which is the difference of 250 minus the 32 cents. So that's 218. It gives me a 14.67% rate of return by this Friday is what we're looking for. If I can buy this option back for a penny or two at the end of the week or today, tomorrow, doesn't matter. I'll buy it back. My short leg, I'll buy back, close it out and call it a day, right? 14%. Forget the dollar amount, but Rob, it's only $32. No, it's only 14%. If you were willing to spend $1,100, then go do 4 of these. You've got the same $1,100, but it's not $1,100 at risk in that trade, right? You got the same $1,100 in there. You've done more contracts, but you're looking at 14% rate of return with only an 18% chance of being wrong on this trade. And you want to use that in a spread as the one you sold. The one we sold is the one in red. The one we bought is in green. All right. All right. Let me see. Does selling a put require me to own the stock? No, Jim, it does not. It doesn't require you to own the stock at all. If somebody said to you, you have to buy the stock at 540, no problem. You do a Mr. Miyagi move. Right? And you make somebody else buy it at 537. You never have to take 537.5. You never have to take possession of that position. Ever, 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 ever. All right? Let's see. Depends on your appetite for risk. Remember, options can be exercised on Saturday. Not weeklies, they can't, Tom. Weeklies have to be exercised by 6 p.m. Friday night. It's a must. Right? Market makers are not allowed to go home until all weekly options are settled. So Tom said, so sometimes it's better to close them than to avoid news events. Oh, I'm a big fan with that, Tom. I don't leave short positions open over the weekend. Absolutely. Big fan, 100% in agreement with you on that. All right? So guys, this is the reason behind the setup, right? This is why we trade credit spreads. Don't look at dollar amount, look at rate of return. Are there trades that give a bigger dollar amount? Yes. Then why doesn't everybody just do that? Why doesn't everybody just do the one trade that gives the biggest dollar amount and never do anything else? Why don't we all just go, look, if you want to trade what I trade, then here's what you need to do. It's pretty simple. You need to trade Amazon. Don't trade anything else, just Amazon. Why? Because it's the biggest rate of return you're going to get. There's no question. Right now, if I am long an Amazon option today, right, we're looking at 70 delta. We're looking at spending about $30, $30.50, right? So $3,000 to do one contract. If we were looking at next week, right, if you had a little bit higher appetite in there, you're looking at spending $58 next week, all right? If you're bullish, assuming you're bullish on Amazon, right? So for me personally, this is what I trade. This is what I trade. Why? Look at Amazon. Amazon moves $63 a day from high to low. If I can find an ideal spot, the right place to trade, by the way, look at yesterday, fib to fib, right? If I can find an ideal spot to enter the trade, as we did yesterday, we moved up, we retested that purple line and bounced. There's the ideal entry into Amazon. And now when you're talking about a move on Amazon yesterday that went from 32, we'll call it 32.10 to 32.75, 65-point move, I think we could have done okay in there. You're not getting all of it, but what if you only got 10 or 20 bucks, 30 bucks, right? Well, some of you sitting there going, Rob, I ain't taking the risk on with Amazon. I am not going to go ahead and pick up that bid-ask spread on Amazon. Where are we? 56 to 59. No way. I'm not giving. That's $3. I'm underwater when I hit enter. But that's the best profit trade. Why not just trade it? Chipotle Mexican Grill, Booking, Google. 4 of my favorites. I love Netflix. I love Moderna. Right? I like the high flyers. Right? I'm trying to give you some things that don't necessarily take you there, but some reasons why the high flyers work. But I think you want to have A, the experience, and B, the risk tolerance in order to trade these as a directional trade. So instead, I go ahead and I do a credit spread on it. And I take in less premium, but I'm still trading those bigger moves on my positions. All right? Here, guys, let's take a look. Let's take a look at one more trade setup in there. So zero line breakouts. I'm a huge fan of zero line breakouts, right? Let's go look at General Dynamics, GD. All right. So actually, let me take the symbol grid down and make it just a little bit bigger. All right. Perfect. So we've got a really nice Fibonacci move on GD. And here's the fib. We had a nice strong move up. Good directional move. Nice pull back to the 236, which is hesitation. That's a hesitation level. It did it multiple times. And we got a fake breakout right there. And then we pulled back. And we got another breakout. We pulled back, right? A little bit deeper. We're here now again. What I'm looking at here is on these breakouts, I'm looking for a breakout that has a potential move to the upside, right? Where I think it can make it up near that 204 and possibly 211, those next two lines, right? So General Dynamics, they're okay. Not my favorite of the patterns, but they're all right. FDS, let's look at FDS. Nice, very nice. We had the breakout take place once, right? We got this nice breakout in here. We failed, we came back, and we're retesting, right? Breakouts are hard. To say, yes, I knew that that breakout was going to be, that's a winner, baby. That's a home run. I know it's going to the next level. I probably don't, right? So what I'm looking for here today is, can we get a bounce off that 365.77? If we can, I'm looking to take a bullish entry on FDS, right? Fact set. So what am I looking to do then? Okay. What I'm looking for is buying an option on this, right? I'm going to go ahead and set my stop somewhere down about here. I can't really see the number. Let's see. So right about 363, I'm going to set my target. Oh, wrong one. I'm going to set my first target right up about 372. And my second target Let's bring this down a little bit. Right about 380. Okay, the 363 is my stop. So if I'm wrong and it goes, it's probably 362 half, somewhere around there. Close enough. Okay. So what I'm looking for with this trade is give me the bounce. My first two contracts. I like doing in twos. Rob, I can't afford to. Do one and you take the first target only. That's okay. So I'm going to get out about 372 and a half at my first target. I'm going to sell half my position if I have more than one contract. My second half of the position, I'm going to sell right about 380. All right, and I'm out of this trade. If I'm wrong and it goes against me, we're going to get out at 362 and a half. If the stock moves down there, sell the option at market, whatever the price of the option is going for. I am out of that trade completely. All right, and let me see. All right, here is every trade we've done. They're all on our channel. We have every one of these trades are on our website. Many of them are on our YouTube channel now. You can check them all out there at WealthbuildersHQ.com. But starting back on May 20th, we basically, the first two lines are header lines. So they weren't trades. We've got 25 lines in there right now filled. So we've got 23 trades we've taken in there. Of the 23 trades, we've had 4 of them. They're in blue. Right? No trade was taken. Right? Of the 23, 4 weren't taken. 3 of those trades went against us. 1, 2, 3. The rest of them, you do the math. It's still way too early in the morning for math for me. The balance of them all worked. Right? What does that mean? The balance of them moved in our direction to the tune of $12,431.25. 2 contracts, since I know many of you like dollars, 2 contracts over the course of 23 trades. Over the course of May 20th to August 20th, 3 months, we're up a little over 12, almost 12.5 on this trade. All right. Guys, you want to check this out. Listen, I put out free videos a couple of times a week, usually at least twice a week. Last week was vacation week for me. At least twice, which is why we didn't do show last week, last Tuesday morning. We do at least 2 a week, right? Tradewithrob.com/go. Guys, you can go there, register, get a free the free trade setup. So send you a text or email, whatever you want, to let you know that they're ready. And guys, here, are we doing okay? Yeah, I think we're doing okay with our numbers. All right. If you're interested in it, take advantage. Listen, for me, if someone says, here's my numbers, here's what I'm doing, and everyone, go back and look at them. Go watch every single video we've done. Go look at it and see exactly what we call out. I even have a training video on our YouTube channel that teaches you how to do this trade. All the details that you need behind it, the entries, your stops, adjusting your stops, when, who, what, where, why, when, how. Everything is built inside of that setup, right? So you're good to go. You're golden. Everything you need, tradewithrob.com/go, and you should be good to go. All right, let's see. All right. So you guys got 2 symbols in here. Let's go take a quick look and see what you got. CARA. So on CARA, Greg, that was Venkat. What is the compelling reason to trade this stock? Right? I don't know the company. They had an exhaustion gap that ran into an island reversal that had a massive gap down that was not earnings related, because earnings are showing up here, right? So I don't know what caused any of that. I see resistance right up here about that $15 range, so I'd be very careful on this one, right? But that's me. It's not necessarily my type of trade on this. If anything, I'm looking for it to break the bottom at 1175 and potentially trade to the downside. ODTE. It's overall in a bearish trend. Earnings were out. They got a pop and then a fail off of it. So Put buying with the potential of getting it down back to about 15 potentially. All right, that's hold on, wrong one. Sorry, you said ODTE. Why is that OEC? ODTE. Yep, I don't know if it's over the counter, but I don't have it. I don't have it on my system here, and I've got pretty much every major stock there is. ESGC. $0.64 stock. Next. I'm not the guy for these low price positions. I don't trade them. Right. And, you know, we were at, you know, about $5 and now we're at 64 cents. I mean, if you're shorting it, it's awesome. You only got 64 cents to go. But don't really know what to tell you. I don't know news behind some of these companies, so I'm really not sure what they do. All right, so that's it. Let's see. Thinking about it, Rob. Thanks. Making a lot. Selling puts and calls, singles and strangles, making good bank. Excellent. Keith said to sell a put, you might just want to have the cash available in case shares get put to you. Option level 2 and above, you can sell puts. I know you can sell puts in a retirement account, Keith, if your broker allows puts for cash, right? So, Jim, for the alerts, right? Let me see. For the alerts, it's trade with Rob /go is what you're looking for. So I'll drop it in YouTube. .com/go. TradeWithRob.com/go is where you go for the free alerts a couple times a week, Jim. So by all means, grab them. All right. Where are we doing here? Tesla. You're welcome, Keith. Let's see. TSLA. Big Tesla fan. Let me go over to my template with my moving averages on it. Yeah, yesterday was a good catalyst day. We knew they were moving up. 700 was our first target. 718 is our next target of what we're looking for. So we had really nice opportunity yesterday. Today, we've already made our move, right? So if you're in the trade, I'm looking at 718 as resistance. So just under that would be my target. If you're looking for an entry, I'd be looking for the bounce off the 700. If we look this morning at Tesla, let's see where we're at. So this is pre-market on Tesla. They've had a nice move. They moved up to a high of 714 on Tesla. So let's see. 714, we've got 718 right here. So we moved up right about a little higher than yesterday's high price was. So we're already up in this range. I would want the pullback in there. If I'm day trading it and I can't get those kind of moves, I'll be looking at things like pivot points. But overall, I am liking it better if it pulls back to that 700 level for me to take the trade. Alan, you're welcome. Appreciate that. Hey, Ray, how you doing? Ronnie, awesome time, sir. Great teacher. Thank you. Yeah, you're quite welcome. You're quite welcome. Guys, go ahead and smash that like. Oh, it sounds like we are there. That is my trade station, 8 o'clock, that we got to get rocking and rolling. So go to TradeWithRob /go. If you guys have an interest in coming to this live event we're doing in New York, it's $99 for a full day on September 17th. Come to the website. You'll see it there. Check it out. Guys, have a great rest of your day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. See you all at our next event.